Welcome to Talk Tickers, and today we're digging into a fascinating one, VEON's Q3 2025 earnings. Now, this was a report that on the surface looked, well, pretty bad, but then the stock went on an absolute tear. So what's going on here? Let's get into it. So this is the big puzzle, right? The headline number comes out, and it's a pretty big miss on the GAAP EPS. But at the same time, the stock just rips higher, closing up almost 15%. You see that, and you've got to ask, what on earth did the market see that the headlines completely missed? All right, let's start with the number that caused all the initial confusion. The official GAAP earnings came in at a loss of $1.84 per share. That was a good 27 cents below what analysts were expecting. And, on its face, that looks pretty rough. But, and this is a huge but, at the very same time the company drops this number, nearly 20% year-over-year growth in EBITDA. Think about that. That doesn't just signal a healthy business. That signals a business that is seriously accelerating. This right here, this is the disconnect we need to unpack.
So how do we make sense of these two completely different stories? Well, it all comes down to looking past that scary headline number and digging into the one-off charges that created it. And believe me, the market clearly did its homework on this one.
Okay, so this slide right here, this is where it all makes sense. That big, ugly loss, it was entirely, and I mean entirely, driven by $259 million in charges that are basically just accounting noise. These aren't real operational losses. You had an accounting charge for the Kyivstar SPAC deal and a currency thing from when they sold their business in Kyrgyzstan. The most important part? Neither of these had any impact on the company's actual cash flow. Zero. And you know what? Management knew this would be confusing, so they went out of their way to make it crystal clear. The CEO himself got on the call and basically said, look, these are just paper charges. They don't touch the real performance of the business, our cash, or our future outlook. And you know what? The market listened. And if you needed any more proof of their confidence, check this out. In the very same report, they officially removed that scary going concern language. That's a huge deal. It's management telling the world that their balance sheet is stronger and way more resilient. It's a massive vote of confidence. Okay, so once you sweep all that accounting noise aside, the market could finally focus on the real story here. And that story is VEON's incredible transformation into a digital-first operator. This is the engine that's really driving the company forward. And just look at the numbers, they totally back it up. Digital revenues shot up by an incredible 63% year over year. They now make up almost 18% of the entire business. Just a year ago, that was only 11%. So let's be clear, this isn't some side hobby, it's quickly becoming the core of the entire company. And here is why that digital growth matters so much. When a customer uses both their regular cell service and one of these digital apps, they become incredibly valuable. We're talking almost 4 times the revenue of a basic subscriber. This high-value group is now driving over half, 55% of all customer revenues. It's a total game changer. Now, this digital growth isn't just happening by chance. It's all part of a very smart, very deliberate strategy. They unlocked billions in value by taking Kyivstar public. They're getting leaner with an asset-light model. They've inked a game-changing partnership with Starlink. And they're weaving AI into everything they do. These are big, bold moves. But if you had to point to the one single thing that truly lit a fire under the stock, the real aha moment for investors, it was this. Management sending a clear signal that the good times aren't just here to stay, they're actually about to get even better. And boom, here's the knockout punch. VEON raised its full-year guidance for EBITDA growth. They took their forecast from a range of 14 to 16%, all the way up to 16 to 18%. For anyone watching the markets, you know a guidance raise is one of the most powerful, most bullish signals a company can possibly send. And they didn't just talk the talk, they backed it up with cash. The board approved a brand new $100 million buyback program. So you've got them raising the outlook and returning capital to shareholders at the same time. That combination is exactly what the market loves to see. Okay, so let's put it all together. You've got a messy headline number, a super strong core business underneath, and a really bullish outlook. So what's our take looking forward? Well, this is the next call. We are initiating coverage here with an outperform rating. Our view is pretty straightforward. We think this stock has a ton of room to run as the market fully digests this shift from being just an emerging market telco to becoming a real digital growth powerhouse. The things to watch are that Starlink rollout and continued digital execution. Of course, the risks are still there. geopolitics, and macro stuff. All right, let's talk about the trade idea. How do we see this actually playing out from here? So the thesis is simple. It's a re-rating story, plain and simple. Right now, VEON trades like a cheap, risky utility. But as they keep posting these 60+% digital growth numbers, and then a major catalyst like that Starlink launch grabs all the headlines, the whole narrative is going to be forced to change. The market will have to stop valuing it like a telco and start valuing it like the tech company it's becoming. And that, right there, means a much, much higher valuation. So we'll leave you with this question to think about. Is VEON one of those rare opportunities? A true high-growth digital story that's just currently mispriced and disguised as a boring old telecom company? You know, the results from this quarter strongly suggest that transformation is already happening right now. And as always, this is not financial advice.